Hello, this is the second part of my trading for beginners who have never traded before, and now I'm going to explain to you how you can start learning Forex. Uh, so starting Forex trading for beginners is a simple way to get started. First, read something called Baby Pips Forex School. So I will put the link down below to Baby Pips, and you can start with that. Now, when you first read through Baby Pips and get to the end, you will retain about 30% of what you've read of the information. So read it through again. Now that you will retain about 60% of the information. So read it through again. Now you'll retain 90% of what you've read, and you're ready to go into the next step. Now this is a simple educational thing. The more times you read through something, the more information you retain. This is why people who read books, can tell you that, you read it once, it's great, but you read it multiple times, you can almost get it memorized, and that's without trying. It's just because it's going into your brain and repeated and so on like that. So that's why I recommend you read Baby Pips through from beginning to end each time. And as you do that, things start to gel with you and you start to understand what's going on. So now you've gone through Baby Pips 3 times. What's the next step? Well, the next step is to set up a demo account. And there's different ones. Just about every Forex trading company has a demo account. So, for instance, there's FXCM is the one I use, but there's Forex.com, and there's many more. Just about, I think, every trading company, because they want you to learn. They don't want you to lose your money, because the way they make their money is when you trade, they get a commission for each time you buy and each time you sell. So they want to see you staying in the market as long as possible, because if everybody goes in it, loses their money in a week, and then goes away, they don't make any more money. So they don't want to see you do that. They want to see you stay and make money. So you become a returning customer, and the more you trade, the more they make. They don't make money on the actual trade yourself. So if you lose money, they don't lose money, because Forex trading is zero sum. If you lose money, somebody else in the world made the money, and vice versa. If you make money, that means someone else in the world lost that money. So it's zero sum trading, and it has nothing to do with the company itself. They're just charging you for the trades. So it's similar to Visa or MasterCard or American Express. They make their money when you use your credit card. So if you don't use your credit card, they don't make very much money off you. The more you use your credit card, you go to the donut shop, buy a coffee, you go to the grocery store, you go into the clothing store. Each time you use that, they get a percentage of what you spend as their fee. So they would rather see you using the card and making money, because that's how they do it. So basically, in most trading accounts, they set you up with $50,000 of practice money, and this is play money, if you want to call it that. The official name is paper trading. In other words, you're trading on paper. You're not actually trading on the market. It's not real money. It's pretend money. Now you can practice what you learned in Baby Pips. That'll get you going, and you'll start trading. And I'll warn you right now, you will trade up your $50,000 account, and you will blow out your account. But that's not a problem, because it's not real money. You just reset the account back to $50,000 and start going again. And like I said, it's a practice account, and one of the rules is, if you cannot make money paper trading or in a practice account, you can't make money in a real account. And the reason for that is in a real account you have fees. So those fees are how much you bought or sold the company gets a percentage of that sale. Plus there's carrying charges and fees for you to hold that commodity for a certain period of time and so on like that. So those fees don't show up basically in a practice account. So you can make money in a practice account, go to a real account, and have just as many wins and losses as you did in the practice account, but end up losing money because your fees are greater than what you actually make. So it's a guaranteed percentage of the buy and sell, whether you lose money or not, but that keeps going on every trade. So if you win a few trades and you lose a few trades and so on like that, on a practice account, your account would build up, but if you're not making enough money, the practice account doesn't take into the account the cost of the trades, so you could actually end up losing money even though your win rate is the same as in the practice account. So that is basically what you have to look at when you're dealing with the practice account and a real account. So if you can't make money on a practice account, you will not, I guarantee you, not make money in real money. And everybody wants to get to real money because everything you see on the internet, it's, you know, how to get rich quick and so on like that. And trust me, I've been doing this for 22 years and you don't get rich quick. Everything you hear and so on like that, you talk to the true investors, they'll tell you how they blew out their account and then they went back into it and they blew out their account again, and you know, they blew out their cash accounts 3 or 4 times before they started to learn it and understand it, and then they started making money. So if anybody tells you there's get quick rich scheme, go the other way, because it's not true. Yes, there's people, and they're called lottery trades. There's people that have bought a stock or something like that, or a commodity, and it's gone through the roof and they made a ton of money and so on like that. But like I said, they're referred to in the trading world as lottery trades. And you buy a lottery ticket, you win big, well, hey, that's great. But how many people buy a lottery ticket and don't win anything? So that's basis of the lottery trade. Those one-off ones, you know, the guy, you know, I did one trade in a day and I made $200,000, right? Well, yeah, it's possible, and these people, I believe them when they say that, but you know, there's only a few people out there that are saying that, and so you can't figure on that. So there's people, you know, that trade for years, and you know, they make a little bit of money and so on like that, but it takes them years till they get to the point where they're making a regular amount, and then at the same time it takes a lot of time to build up their account, because the more money in your account, the more money you can make. You know, that falls back on you know, the rich get richer and the poor get poorer. The more money you have to invest, the larger position you can take, and larger position means a larger win. It also means a larger loss as well. So if you think you're just going to take $100,000, put it into the market, and you know, within a few days have $1 million, you're sadly mistaken. You know, like you will with the practice account, you'd blow out your account, you'd have no money. So most of the professional traders talk about, you know, you start with a certain amount of money and you just stay with that money, and you just compound that money and compound it. And if you studied compounding interest, that builds up very quickly. And that's the old saying, you know, you give a person 1 penny one day, and the next day you give them 2 pennies, and the next day you give them 4 pennies. So it's doubling. You know, how long will it be before they have $1 million? And of course, it's not very long. It's just the exponential way money grows when you're talking about that. So that's what most your people will tell you, is you're looking at increasing the money you have, and you just stay with that and keep making it larger. So that's basically what you would end up doing. I was making $2,000 a day trading Apple, and that was day in, day out. I made $2,000. But to do that, I was trading a $250,000 trading account. Well, yes, it's big money, but if you think, okay, well, cut that down by to 1/10, so a $25,000 account, that's basically only $100 a day. Well, it's still a lot of money, but you're not going to retire on $100 a day. Take that down to the $5,000 mark, and all you're making is $20 a day. Now, $20 a day, you'd basically be better going working at the donut shop or Starbucks or something like that. You'd make more money than $20 a day working there than you would trading and only making $20. So this is where the amount you have in your account makes a difference on how much you earn. You're making the same win-loss ratio, but it gets down to nothing. So the difference between $20 on a $5,000 account or $1,000 on a $250,000 account, that's basically what you're looking at. But with Forex, of course, with a $5,000 account, you can actually trade it quite decently, and there's probably people that on a $5,000 account can double their account in 1 month. One of the traders that I followed in the past, for demonstration, they had another account that they traded, but they had one account that at the first of every month they started out with $3,000, and at the end of the month they had doubled the account to $6,000 or sometimes more. Well, you can see that if you're doubling your account, like I explained with the penny doubling thing, it won't take you long. But he did that just to prove to everybody that every month you can trade and double your account with a $3,000 account. So, but that's not with stocks. This person was doing it with commodities, and commodities are a lot better than stocks as far as I'm concerned, but not as good as Forex, because of course Forex, you can make a decent amount of money per day if you work at it, and that will compound and so on like that. So that's basically what you do to get started with a trading account. Now, like I said, there's different companies, FXCM, Forex.com, and there's hundreds more that will set you up with a free account. Now, there's different trading platforms. There's TradeStation that you can trade it with, MetaTrader. There's a number of them. I use MetaTrader, and the stats are 80% of all traders in Forex trade with the MetaTrader platform, and that's because it's easy, it's robust. Where many trading platforms will crash, you have to restart them. MetaTrader basically doesn't crash. It will stop trading if something goes wrong. Let's say you lose your internet connection or something like that, but you get your internet connection back. MetaTrader it's bulletproof. It's back up there. There's expert advisors, which are EAs, is what they're called in the industry as an abbreviation. And there's basically every expert advisor or EA, which is a little software program that runs in MetaTrader, so you can set it up to trade for you, or you can set it up for it to give you signals. So let's say you're doing a moving average cross, you can set it up that when the moving average crosses, it notifies you and says, hey, the British pound Aussie dollar has just crossed up, so you can go and look at it and so on like that. So these are expert advisor, which is little programs, or as they are called now, a little app that you just easily plug in. Plus every indicator that's on the market you can put into MetaTrader, so you can go into MetaTrader and you can plug in your indicators. They come with a lot of indicators, but you can go online if they don't have the indicator you're looking for. You can download that and you can put it in there, and it'll handle as many as you can. So that's how to get started, and this is number 2 in the series, and the next one I'll be going into how to work your practice account and how to get into real money in the next one. So Yeah, the link will be down below, so you can go to that and you can check that out. So thank you very much, and if this is any help to you, please go ahead and subscribe and hit the like button, and that'd be really nice if you could do that for me. I'd appreciate that. Thank you very much.